Venezuela can shut the electricity off. Well, then they can't mine jack. Then that Bitcoin is worthless. The same in Puerto Rico.
Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with silverdoctors.com. And with us today is Luis Cammarosano. He is the host and founder of the Small Gold blog, which focuses on gold, silver, economics, and cryptocurrencies. And co-hosting with me today is James Anderson from SD Bullion. Luis, thank you so much for joining us today here.
Oh, thanks for having me on.
All right. Now, I was really intrigued to have you on, and you post so many really interesting articles. In one of your recent posts, you talked about how you say that gold this year will outperform silver. And that's actually what we've seen. Gold is up on the year just a little, and silver is down just a little. But why do you see this continuing?
Well, it's been a trend it's actually been a trend for a very, very long time. If you go back to 1934, when the United States fixed the price of gold by the Gold Act of 34, $35 an ounce, that price stayed the same. From 1934, basically up until 1974, they controlled it at $35. They had it set by law. And that meant that you had an artificial gold-silver ratio. So people are expecting it to go lower, but you have to remember gold never got to go higher for those 35, 40 years. Then when they allowed people to buy gold in 1974, and then when the world became more wealthy, India, China, they gravitated towards gold. So we've seen an elevated gold-silver ratio averaging well above 50 ever since 1975. And the only time we've had a pretty low gold-silver ratio was that brief shining moment when the Hunts brothers try to wrap up the silver market. They try to get as much silver as they could. And even then, it went down to 16 to 1. And then we had something around 30, 35 to 1 in 2011 when silver spiked. But other than that, normal circumstances, gold has had a big lead over silver. And I think that's going to carry on because if there are any shocks to the market, people are going to go to gold first. You're seeing Russia, Turkey, Kazakhstan adding to their gold. The place that people go initially when there is a crisis or they're contemplating a crisis or they're just trying to save wealth, it's always gold first. Silver was money, just like gold was money in terms of currency, but it was pocket change. You didn't save in silver, you saved in gold, and I think that's still the case today. And until gold gets into a real big bull market, I don't think silver will catch up. And you've seen it the last 5 years. The gold is up about 32% over silver, and it steadily just keeps moving up, and the gold-silver ratio is now 80, 81, 82. And until gold takes a big hit and goes up to 1,400, 1,500, I don't think silver will catch into that updraft until gold makes a definitive move forward. Could be wrong, but that's what I'm seeing.
That's just, I think, typically how it goes in bull markets and bullion. Usually you have gold outperforming silver at first. With toward the end, where you look at a chart, you see gold was kind of the more steady, and then silver kind of goes up on a much steeper angle and maybe outperforms gold for short stance. But yeah, I totally agree in terms of, that's how it's been historically, especially in 1980 and 2011. That's certainly kind of how it played.
And also, if you look at the drop, when they finally get around to manipulating silver, because silver is much smaller, it gets hit much, much harder than gold because there is a physical underpinning for gold that's larger than silver. The market is much larger, and silver is a lot easier to manipulate. It's a smaller market.
Yeah. In terms of derivatives now, for sure, that's definitely been the case. If you're talking about the COMEX and how quickly things can change, whether or not it's from rules or from rules changing on the COMEX or them, they'll basically increase the amount of margin that you have to be a trader. And a lot of these traders on these derivative exchanges, a lot of them are individuals who only have so deep of pockets, and it's if the market's jacking up, they run out of room to bet, basically. I mean, the house, the banks, they have more money, so if they want to move the market, they'll move it, one way or the other.
I also think that the small retail investor is definitely more heavily invested in silver than gold, and that's a plus and a negative. But I also think that the small retail investor is less looking. I mean, some people buy silver to preserve wealth, but a lot of people figure silver is the better buy. It's more speculative. I'm going to get that bigger bang for the buck when they take off. We've lost a lot of that, not a lot, but some of that silver retail buying into cryptos, because cryptos provide that speculative pop that a lot of people are looking for. Gold, you don't buy for the speculative pop as much as you do silver. So I think crypto is taking away, even though I keep trying to say Bitcoin is digital gold, I think that the cryptos are what people are looking at to get that speculative pop. I
would agree, at least for the younger people who have maybe they don't feel like waiting years. They want to try and make a 2 or 5 bagger in a matter of months, right? They go out there and speculate in the short term on cryptos. There's certainly a lot of that. I would say, in my experience with dealing with wholesale and retail customers, high net worth, even just average middle class people, the demographics of ages, like guys who are in their 50s and 60s, and women as well, when they're going to buy bullion, a lot of times when you explain to them the volatility involved with silver, they'll certainly lean into gold because they don't want to see that volatility. They want to have something that's a little more steady. So you'll see people in their older ages going majority gold and maybe a little bit of a play into silver just because of the value proposition. But silver takes a while sometimes, and it can be extremely volatile. So,
and also, if you have a lot of money, your storage costs are going to be much higher in buying equal amounts of silver than if you buy gold. There's 80 to 1. The space it takes up is tremendous.
And the scene that can happen, when the post office guy pulls up to your house and there's a
pallet,
4 or 5 heavy boxes. I mean, it's kind of weird for you to be getting bearing supplies dropped at your house. So there's all types of complexities that come with buying a lot of silver.
It didn't stop Buffett, and it didn't stop the Hunt brothers. People forget. I was having a conversation with David Morgan the other day, and he was mentioning that Buffett, had bought, I think it was in 1998, 129 million ounces physical, took delivery of it. And then we were speculating that he sold it pretty quickly, so he never got the pop on it, but they suggest that he sold it to help set up the SLV fund.
Right. That 2006, that's about what it lines up at. If you look at the charts from 98 to 2006, the prices, I think he got in around $4 or $5 and he sold out at like 13. So maybe he doubled his money.
Right.
Something like that. But it was a long trade, right? I mean, that's a pretty good one, though. Still doubling your money over that time in something that's physical and that can't go to zero is pretty good. But
he must have big storage fees. That's why I mentioned it. 129 million ounces.
Yes. That's true. I mean, when you have that much, you can actually negotiate, right? You can get in there and talk directly to the depository, and you have leverage with that kind of size.
Now, Lewis, I'm interested to know, what is your perspective on if people are holding gold or silver for the long term, do you still think silver will outperform?
I think, and I'm only going on history, but I don't see why it would change, that if we get a big run-up in gold, we will get a bigger spike in silver. But historically, those spikes, as Mr. Anderson was noting, they're short-lived. So I think that would be a time for people who, if they are heavily invested in silver, to convert into gold when that ratio comes down. I think I've seen a lot of people, that's the conventional wisdom of what people are saying they're going to do. They're waiting for the silver spike. I'm not saying that silver's not going to rise. I'm saying it's not going to take off until gold really asserts itself and solidly holds $1,400, $1,500, $1,600.
Yeah, Lewis, I was looking at some of the work you did recently. I think you were talking about India in one of your recent pieces that you made, being a very big silver buyer, and it looks like they're getting a little more aggressive in their imports. And so I went back and looked and just was looking at India. Can you give us a little bit of what you see when you look at India's data, how much silver importing they're doing?
Yeah, so I started looking at India a few years ago and tracking their gold imports because India is well known as having a cultural affinity for gold, not so much for silver. And India, for both gold and silver does not have domestic mining in any large amounts. In fact, I don't even think it has one mine that works for gold. It has, I think, 17, 18 million tops for silver. So it has to import the bulk of its gold and silver demand. Now with gold, because of the price of gold and the amount that they import, they have sometimes 10, 15% of their imports are gold. That's the entire country's imports. So the government is against gold for that reason. They put a 10% duty on. All it does is make people try to smuggle around it. And then there's a goods and services tax on top of gold. And I think what's happened in recent years are, while silver is not necessarily a substitute for gold, there are Indians who figure there's more Indians now that are middle class, I think, than we even have people in the United States. So they buy silver. Also, India has industrial uses for silver. It built the world's largest solar plant. So it's using tens of millions of ounces in its silver products, solar projects. And so India had its biggest year in 2015 for imports, like 8,500 tons. And that coincided with the U.S. Mint, the Canadian Mint, the Austrian Mint, the Mexican Mint, all the mints across the world having record years. And that's when I was looking at people talk about when the physical market will take over and break the paper game. And then it all fell apart. Then India's silver demand fell off the table in 2016. We've seen a decline, the U.S. Mint, the Canadian Mint, and so on. And they were buying at a time. 2015 also, coincidentally, was the low in this cycle for silver. I think we got to 1420, 1430, something like that in December 2015. So it seems that the Indians, both Americans and Indians are similar in that Americans tend to buy, if you look at your sales data, you probably know this better than I do, but when the price is rising, people pile in because they want to catch it up. And when it's declining fast, they want to get the bargain. And Indians are different, same in that when the price goes down, they scoop it up with both hands. But when the price goes up, they hold off. So that's what happened in 2016. You still had some sell-through for Americans because the price was starting to move higher in 2016. Then we had Brexit, and we got to $21, $22 in the middle of 2016. But by then, Indian gold and Indian silver imports had pretty much slowed down because they knew the price had gone too high, too fast, and they stopped buying. But now, as we've moved into 2017, there's always pent-up demand for Indian. Indian demand is is a constant demand, but it ebbs and flows based on how much money they have. A lot of rural farmers buy gold because they don't have bank accounts. So if there's a good rainy monsoon season and the farmers do well, they've got some extra cash. There's no point in holding on to those rupees. They know that. So they buy gold, and then to a certain extent, they also buy silver. But silver isn't really the investment. From what I understand, it's more of a trade for them or for decorative items. A lot of middle-class Indians have silverware, which Americans do not have anymore, silver sets. Less so they're buying it as coins and bars. They're buying a lot of middle-class cheap jewelry. I mean, you can buy bracelets, rings, $20, $30, $40, which a lot of Indians now have to spend. So that's driving the silver demand in India.
Mm-hmm. Yeah, and just a couple points to throw in there. You had the demonetization, which threw a huge wrench in just the economy there. I'm sure you probably did a lot of researching on that, what that did to their importing of silver and gold.
It dropped off the initial. What happened was the first few days, there was a mad rush to turn your rupees in and get something, gold or silver, because after that they became worthless. You had to wait in line at the bank to try to get the new rupees, and then they didn't have enough of them for people to have. So gold and silver demand went down, not because people didn't want it, because they didn't have any cash to buy it because they took all the cash out of the system. So we have seen, I think that scared people. That was the one thing that actually made me start to look at cryptocurrencies in a different light. I always said, why would you need a digital currency to buy something? You can always use cash. You can always use your credit card. Why? But when I saw how a government can just shut your money off, just say you don't have that money anymore, then I realized no one can shut you off of Bitcoin. Now, I still don't buy Bitcoin because I want to go out and spend it, but you realize if you have it, it can only be stolen from you illegally. Someone would have to hack it. But with the government just shutting down the entire country and saying that 85% of the then cash in circulation was no longer going to be any good, that's a wake-up call. And then you realize, well, even if cryptocurrencies are not backed by anything, they're not based on anything, but at least they're not centrally issued where they can recall them all or just make them worthless overnight.
Just a background motive for that demonetization combination. It's probably a little bit more control, and historically their banking system's been pretty bankrupt. I've heard William White talk about how bad that banking system has been for decades. So pushing people into bank accounts would probably help prop it up for at least for a short term until they do whatever they're going to do with that banking system. So I think if you mark to market that banking system, it's technically probably bankrupt.
It was basically a way of getting more customers, because people had to, they had to go to the bank with the rupees, and then they wouldn't even necessarily give them the amounts of cash and new notes for their old notes. They said the reason was if you couldn't explain why you had that, then we wouldn't give it to you, but you can open up a bank account and put the money in there. And that's how they probably, in a way, they were able to capitalize their banking system, at least. And they claimed it was to catch out criminals, but
right. But that's always a bigger motive. If you're doing something that drastic, there's got to be more to it.
Yeah, on a big level. Yeah.
Now, moving our focus from precious metals to oil, you recently reported on how the U.S. may become the world's largest exporter of oil next year. So if this were to happen, first of all, do you expect this to happen? And second, how do you think this would affect the petrodollar?
Okay, so one of the things I noticed back in 2014 when they were projecting what shale was going to be, the first thing that came to my mind is, in the gold and silver community, there's always talk about the end of the petrodollar. And for our listeners, most of us know, but if you don't know, that the petrodollar is based on the agreements that Kissinger and Nixon set up with the Saudi Arabia and a couple other Gulf states, that they would agree to price their oil only in dollars and only accept dollars. And the reason they did that was because Nixon pulled the United States out of the Bretton Woods agreements in 1971, and which allowed foreign central banks to turn their dollars in for gold at the United States Treasury. Well, once they stopped that, a lot of the European countries, which were the major economic forces at the time, decided, well, why do we want the dollar? Why is the dollar any better than anything else if it's not backed by gold? So the United States had to scramble quickly and create some additional demand for the dollar other than just it was the United States. And the United States needed to have that demand because they were spending money like drunken sailors. So they came up with this agreement where they would protect the dollar by creating demand through Saudi Arabia, who would price their oil and accept only oil. I think today that's less important as to why the dollar is still the world reserve currency, because the total amount of trade in oil, I think globally, is 8 to 12%. And it is good that for the United States that countries hold dollars to buy oil from Saudi Arabia. However, they hold dollars today for far more reasons than just to buy oil. But assuming they're only holding it to buy oil, which is not the case, they're holding it because the Treasury market is the most liquid market in the world, is if the United States becomes the world's largest oil exporter, which they're on track to do, well, then those same countries are going to need dollars to buy oil from the United States. So if the dollar needs some type of petro backing, you're going to get it from U.S. oil. And China's included in that. China buys oil from the United States today. They also buy significant amounts of natural gas that the United States sells. So what I think is happening is the United States, as it becomes an oil exporter, it actually can just swap out Saudi Arabia for that part of the demand for dollars. However, I don't think that Saudi Arabia is going away anytime soon as a U.S. ally, because this Iran deal, you know that Saudi Arabia is very, very happy about this. If you go back to the history of the Saudi-U.S. relationship, it kind of hit the rocks with Obama when, even though he vetoed the 9/11 bill, the Congress overrode his veto. And remember, Saudi Arabia threatened to sell their treasuries. This was in September 2016, and then the United States, Obama vetoed the bill and the Congress overrode it. But interesting thing happened. Saudi Arabia did not only not sell its treasuries once Donald Trump became president, it increased them from about 110 billion to about 150 billion, all through 2017. And now you look what's happened is the United States taking away the Iran deal. Well, Saudi Arabia is very happy because they don't like Iran at all. So I don't see Saudi Arabia pulling its support from its part of the Petro Dollar. And I think the United States becoming a major oil exporter actually even buttresses the Petro Dollar, because now the Petro Dollar is still based on Saudi oil in part and also based on U.S. oil.
You do agree, though, I believe. I mean, there is somewhat of a movement for a couple of the nations like Russia and China that want to have some more sway in the pricing of commodities, especially China, as they consume so much in terms of commodity consumption and oil, et cetera, that they would longer term have a strategy probably to have some influence on price discovery.
Yes, I think they want to have influence on price discovery. They also want to have trade, because it's not very efficient to swap your dollars and swap your own currency and get the other currency and always have to get dollars. However, for purposes of trade, that amount isn't as much as the amounts that countries actually hold in reserve. So, for example, Russia. Everyone talks about China dumping treasuries, Russia dumping treasuries. 2017, so all the major countries add to the U.S. treasuries, not because they like the U.S., not because they even plan on using them in trade, but for the reserve purposes. Now, Russia had, after the first rounds of sanctions in 2000, I think it was 13, 14, whatever was going on back then, they started to sell their treasuries, and they were down to 67 billion. But in 2017, they went from 86 billion to about 96 billion in treasuries, because it was part of their increasing their overall foreign reserves, and that also included buying gold. So if you take Russia's foreign reserve position, they still have more U.S. treasuries in dollar amount than they have in gold, even though they have 1,892 tons of gold, which is worth about, I calculated, $83 billion. Now, there's a country that really does no trade with the United States, really should have no reason to hold U.S. treasuries, and yet still holds treasuries and has increased their treasury position over the last 16, 18 months. China, same thing. China uses the dollars. They were selling their treasuries off as the dollar was skyrocketing after QE ended from 2015 to 2017. So they use dollars for their own currency manipulation. They use them. They issue dollar-denominated debt for their state-owned banks. The sovereign entity has issued dollar-denominated bonds. So the dollar and the dollar-denominated bonds and U.S. treasuries are the most liquid. And while they may not want to use them and reduce the reliance, they're not looking to basically undermine their entire finances and the entire financial system. So what I think is the best thing, what they're doing is they're trying to trade local currencies when they can. But that's different than end of dollar hegemony, dollar collapse. And, that kind of talk drives me nuts, because no one benefits from a dollar collapse. And the only people that think they benefit are gold holders, that somehow their gold is going to go higher because the dollar collapses. But the countries that are actually buying gold are the ones that are going through foreign currency collapses. Argentina, Turkey, those are Iran right now. Countries whose currencies are getting clobbered. Venezuela. Well, Venezuela can even buy gold because it's bankrupt. But the point being is, you don't want to be in a currency collapse environment. And clearly, if the United States was the center of that, then your gold wouldn't do you much good, because the amount of goods and services that would flow that are based on the entire dollar system would be gone. More likely what will happen is you're going to see currency collapses in all the emerging markets right now, because as the dollar gets stronger, they have dollar-denominated debt. It gets more expensive for them to issue to pay back their dollars, and they don't have them if they don't have good economies. China's got the same problem. China has got massive amounts of debt. People don't talk about it. They only focus on the U.S. debt situation, but China has massive amounts of internal debt, and that makes them subject to having to devalue their yuan if they need to, which makes foreigners very reluctant to hold on to it. So what's happened over the last year, there's this theme that countries are dumping treasuries. They're not. Saudi Arabia increased. Even Belgium, which is a proxy oftentimes for Chinese treasury buying, they increased from 110 to 123 billion. Switzerland was up 30 billion to 250. United Kingdom, Bank of England, they don't have much gold anymore, but they added another 30 billion to up to 245, 250 billion in treasuries. So the treasury market is deep, and it's not just to have so that you can trade a contract back and forth. That is going to happen, and that makes sense to happen because it's efficient. But no one in the world really benefits from, see, what Russia and China want to do in other countries, Iran, clearly they want to be able to trade. If there's sanctions on them, why should they be bothering with the dollars? They might as well trade and accept currencies amongst themselves. But that doesn't undermine the dollar, because at the same time, Saudi Arabia is also going to be staying with the United States as a result, and they're a bigger oil exporter than Iran is. So it makes sense for countries that are on the outs, outside the SWIFT system, under sanctions, to use alternative means of payment. The one I like the best is not a gold-backed anything, but is what the gold trade note, which is basically, I don't want your yuan, I don't want your real or whatever you've got. I want you to promise to pay me could be $1 notional amount, but I want that amount in gold. And that's good because that's on a per transaction basis. You don't have to back anything, and you have to come up with the gold at that point. And I think that will happen and probably does happen, and we don't know about it all the time amongst a lot of the third world countries.
And you're talking about a yuan type of eventually a note where they're backing it with claims of gold?
Well, I would think that it'd be more likely the other way around. When China accepts when China wants to buy China wants to, let me say this straight. When China wants to buy something, they want to pay in yuan. But when someone wants to sell something to they may have to use gold.
Yeah, it would be very difficult at this moment to be accepting yuan with the debt situation that they have. I completely agree. It's unsustainable, the amount of debt that they've been building in the last decade, so it makes sense.
Now, overall, Louis, are you bullish then on the dollar?
Pretty much. And, one of the questions you asked was, assuming, which is not happening, assuming that the foreigners stop buying treasuries. And I think they're about, I like to say around 25% of the overall 21 trillion in debt. I think they have about 6 trillion, and then there's unfunded liabilities. But I was digging around, and one thing I was trying to figure out was, where are all of these companies are going to repatriate their cash, like Google, Apple, these cash giants, going to put their money? And I figured, well, they're probably going to put it in treasuries. I did a quick look before we got on the call. Apple, guess how many notional dollar amount in treasuries that Apple has? I'll tell you, if Russia has 93 billion, Canada has 89 billion, France has 77 billion, Netherlands 44 billion. What do you think that Apple might have at the moment?
About 200 billion.
No, they have about $60 billion in treasuries. That's just a company. That's at the end of March.
Wow.
Google has 51 billion. So if you look at corporate America, they are going to have a lot of treasuries. Now, I haven't looked at Europeans, but I'm sure European companies hold treasuries as part of their cash equivalents. Japan was the only significant country that actually declined their U.S. Treasury holdings in 2017. China increased and went back into the number one position. Japan sold, but eventually, Japan is spending all of its Bank of Japan is printing up yen and buying the Japanese bonds. But eventually, they're going to have to start buying the U.S. bonds again. And I would think that I know that the Swiss National Bank is adding. They're going to run out of stocks to buy because they don't want to be 10% holders. A lot of the major NASDAQ stocks probably, and have to deal with voting and having control blocks. And then also the Bank of England, the ECB, they buy corporate bonds. They're going to run out of corporate bonds to buy. So the whole problem that I don't look at this as a U.S. issue. I look at the whole thing as a global debt monster. And the only way it gets solved, it's not the United States that's the problem. It's the whole, they may have started it, But China's all in on it. Everyone's all in on it. And the only way they get out of it is they keep buying each other's debt. And they hold that debt on their own balance sheets, and they call them assets, even though in practice and theory, they'll never be paid the full amounts, and they don't intend to be paid on the full amounts. They keep rolling them over, issuing more, finding new entities to buy them, trading them. So I think that looking at the United States as the place where the dollar is going to collapse and everything's going to be better after that, that's not going to happen because the whole world is based on a dollar debt. I'm not saying this is good. I'm just saying that I look at it differently, that it's not like one day all the other countries are going to say, screw this, we've had enough, we're going to dump our treasuries, and we're going to go on our happy way.
I get it. I mean, there are such things called debt super cycles, and doesn't it seem we're getting toward the end of one where the mathematics just don't make much sense? You have demographics in the United States that are bad as well, and you have pensions, liabilities, and stuff that are not funded, that need to be funded, and the only way to do that is to either print the money and bail it out, or somehow go into some nominal hyperinflation scenario or some high inflationary scenario.
But I agree with that. But we keep looking at it and we say, well, 300 trillion of global, 500 trillion is unsustainable, and it just keeps growing. I do, and you cannot create value. We're not creating value by issuing more debt. We know that. So you get global growth slow down, but you still owe the money. You have unfunded liabilities to older people. You don't have enough young people producing to pay for. I get all that, but the point is, I don't know what they do about it. And the problem is, that is the problem. People look to them and say, what do you do about it? And they just come up with a new debt instrument. Either they cancel debt or they and one of the tricks that China uses is when the state-owned bank lends money to a state-owned enterprise to produce some project that will never turn a profit, and it wasn't really intended to. It was intended to give work to 200,000 people in a province, so they built a lot of stuff. And then when the bank comes for the money and there's no cash flow from the project, they go to the People's Bank of China and they say, what do we do? And they say, lend them more money. And they say, well, we just did that. And they said, well, lend them more. And they said, we can't do that anymore. And then they say, well, just convert it to equity because they're not going to pay it back, so it might as well be equity. And these are the types of tricks. And unfortunately, when you get into this financialization where people are satisfied, as we see with gold, silver, but not just in gold and silver, in everything, they're satisfied with paper promises, with digital transfers, they somehow manage to get away with it for a lot longer than we can imagine. And that's why people are into Bitcoin, because they say, well, it's worth something because everyone else agrees it's worth something.
Right. Sometimes frauds can last longer than you think is possible, essentially. I mean, that's basically what it is. I mean, it's
there's no number where you say once we hit 500 trillion global debt, it's all over.
Right. What is the game theory for the fraud to come to fruition and everyone to realize, all right, well, this is bullshit, so give me the real things. I need to have real things. I mean, what is that? What is that number? Where is that timing, I guess, is what we're trying to pin down.
What my issue has been the last 3 years, which is very disturbing, is, as I just mentioned, people have become satisfied and actually want and desire digital assets. Millennials especially. Look at it. You got Uber, right? You don't have to own a car. What's that one? You fly around and you don't even have to. You go and stay at a place. Airbnb. All these assets that aren't assets, they're just places where you can go and rent. You don't ever own or hold anything in your hand. There are entire generations that have never held a silver quarter, a gold coin, never used them. And they think, what would I want? What am I going to do with that? It's going to take up room in my pocket. That's how they look at it. It's a burden. My favorite is the Mark Dice one. They try to give the guy, a $50 face value, 1 ounce gold coin for $50, and they'll take the chocolate bar instead, or they'll say, I don't want it.
Right.
And that highlights not just the financial ignorance, but what they're satisfied with. Netflix, everything is digital, and they don't think of things in hard assets. And if you told them there was a crisis and everything went away, and the government just wired them more digits, they'd be like, oh, that's cool, I got more digits.
Yeah, I mean, I definitely have seen those Mark Dice videos, and the people he's talking to, I know those types of people on the streets in San Diego who are walking around the piers. Most of them are in zombie mode, unconscious,
But what percentage of the but what when people say people are going to demand that we back our money with gold and silver, they'll demand backing it in chocolate because that's what they want.
Yeah, no, I get it. It's like that break point. You don't know what that is and what will happen from it. That's the problem. That's the dangerous part, is once you get enough of people who are angry about a situation, what can occur? And
what happened in 2008? Basically, I was just reading Warren Buffett's thank you letter where he bought Goldman Sachs before the crisis. I mean, implicit, or he probably had an explicit promise that if anything happened to Goldman Sachs, he was going to get paid out.
Insider deals, sure. All the sweetheart deals that he got, sure.
But think about what happened. People were pissed off. What people really wanted then, which didn't really, I mean, it makes sense. Emotionally, they just wanted people to go to jail and then everything go back to the way it was. They weren't saying that we didn't like all this debt and they didn't like the fact that other people got more digital assets than they got.
Right.
And that they lost their house and somebody, quote, made money. But it wasn't the understanding that they needed gold or silver or something to stop this. What they wanted laws. They wanted somebody to go to jail. They didn't want a fixing of the system.
Right. They didn't want the rampant consumerism to end. They just wanted to make sure that there was justice for fraud.
Exactly. That's what I saw. I didn't see this. And if there was a time, that would have been it. And I think we started to see it. I think there was a lot of online, through YouTube, and the rising prices of gold and silver in 2009, 10, and 11 started to make people realize, this is the way to be. And I think that's when the governments decided, no, we don't want even people thinking this way. And they did exactly what they did when they first brought out the futures, was they tried to discourage physical hoarding and try to demoralize people for doing it by knocking down the prices and making sure that money went into the stock market and into the real estate market, because that was the wealth effect they wanted to create. The last thing they wanted was a lot of gold and silver stackers to get wealthy, because that would have taken the wealth out of their hands and that would have changed the dynamic. It's the same right now with cryptocurrencies. They really don't want, unless they're holding 60-70% of these things, other people to have that amount of concentrated wealth. So they want to be in where they want to push the value, and their value is in corporate bonds, sovereign bonds, stock markets, things like that. That's where they can control it. That's where they can track it, and that's where they can skim off the top as much as they want.
Right.
I mean, bullion dealers are not the wealthiest company. I mean, they're not the largest companies in the world.
No, not even close. When you drill down on the largest ones in the United States, you're talking about, I mean, it sounds like a lot, like revenues of like $7 billion a year, but you're talking about basis points on profit margins. Right. It's not that impressive when you break down the profitability.
I bet you Supercuts gets a bigger net profit.
Yeah, the gross profit margin's not too thick.
All right. Well, just one last question for you before we let you go, Louis. When you're talking about how there's really been this sentiment change, in the past, when there's been a crisis, people rush towards gold and silver, but it seems like nowadays that's not what people are really wanting. What do you see happening this time? Will people actually, will the sentiment change? Are we in uncharted territory? Will people not rush towards gold and silver when there's a crisis?
What I'm concerned about, and again, this isn't my point of view. A lot of people, when I say things, they say, well, how can you say that? It's not because I believe it or because I want it to happen. It's what I see happening. I'm looking at, people are saying gold is money, period. Gold has been money for 5,000 years, period. And therefore, gold will always be money. Now, I may agree that it probably should be, or I want it to be, but I'm starting to think that there's enough people out there that are saying, no, Bitcoin is. I'm not saying it is, but I'm seeing there is enough people who actually believe that it is. And what I'm concerned about is the analogy of people in 1880 saying horses are transportation, period. We've been riding horses for 5,000 years, period. And when you need a place to go, you're going to get on a horse. You're not going to get on something with an engine in it blowing smoke out. It's dangerous. It goes too fast. I see historically people take the fast option, whether it makes sense or not. Horses are safer. Horses are better for the environment. You can develop a bond with a horse. I suppose you can with a car, but people chose cars. Now, horses are still valuable, but not in the same way. And horses cost money to store, to feed, just like gold costs. Whereas Bitcoin and cryptocurrencies, they fly around and people are satisfied with that as long as everybody else thinks that value is being transferred. And they think if they can store them, I saw that thing, you guys probably saw it. I think it's nuts, but that's what's happening. They have the billionaires putting their private keys and papers into a vault that has Bitcoin in it.
Yeah.
And that tells me that, forget what I think, that the world has moved in that direction. It's not 100% gold is money, always will be, period, because there's already, and it's not big yet, but it's like $400 billion in value on just cryptocurrencies.
I mean, I agree in some perspective of that. On the internet, for sure, they're very loud, the people who trade Bitcoin, and they have very, very sharp opinions on it. But there's a little bit of a concern in the sense that, there's a bunch of different points. I mean, gold obviously is about 8 trillion roughly. If you're talking about physical gold in the world, that stuff's it's indestructible. And when you look at the cultures that buy it, you're talking about China and India. Those cultures aren't going anywhere but larger. Their middle classes are growing, and we're talking about the next 20, 30, 40 years. They're going to continue to consume physical gold. So the derivative play right now, like if you look, for instance, at the COMEX and ETFs, that's 1.5% of all physical gold in the entire world. And the COMEX is one of 600 ounces of physical gold that backs it. And that is the thing that sways the gold price at the moment.
Right.
1 out of 600 ounces. That is not going to last. That's not going to work 20, 30 years from now. And I don't think so.
Well, you know what's happening in India, and it's disturbing. You're seeing the move towards digital gold. They're encouraging that. People buying gold on their phone.
Right. And that's too in China. I mean, I've been in Hong Kong. Everyone loves to trade paper gold because they're just like these Bitcoin people who like to trade, day trade. And that's fine until there's a crisis and you go and say, wait a second, where's my stuff? And they say, sorry, you were in futures. Suck it.
Right.
And then it's over. Then generations, for 2 generations, will not be buying futures any longer because they all learned their lesson.
You know what I would have? But wouldn't you have thought that would have happened in 1980 when basically the COMEX said, "Hey, Hunt Brothers, guess what? You can only sell silver, and no one on the exchange can do anything except sell silver." You would think that would. I would never trade on the COMEX again if they told me I had a position, but I wasn't able to buy anything. All I could do is sell.
But you're right. If you look at a chart, just look at the chart of volume in silver, and it dropped off, and the chart of the volume never came back for another 10 or 15 years. Pretty much everyone went in the gold, and the gold volume kind of fell at the same time as silver, but they all went. It looks like platinum and palladium 2 months later had their record price highs in like March or April, right? So you're right. And if you look at video of the COMEX, like just look it up on YouTube. 1981, I just saw it the other day. There's like a Sunday morning, like a 15-minute news piece of this guy in the COMEX, Charlie Fetterbush or something like that is his name. And it's the most ridiculous thing you've ever seen. Just watch it. 1981 COMEX, Charlie Fetterbush on YouTube. And then you go and you wonder, where's Charlie Fetterbush? And you go Google it. And Charlie Fetterbush got busted like 2 times for front running his clients in like the late 80s and early 90s, and then eventually got 3 years of this this or that prohibition on the COMEX. But if you start looking at the COMEX in terms of the characters and the people who were trading it in the 80s, it was a Wild West. These people a lot of them were very colorful people, to put it kindly, I think.
Right. Well, it seems that in the collapse situations, I've been trying to get as much information as I can, like in Venezuela or other places, they are using these Bitcoin and Litecoin. You don't hear as much stories that those are people that have been screwed. I mean, their government has totally abandoned them. And you're seeing them, I guess the younger people, they're turning towards setting up mining rigs, if you do that. And when I say mining rigs, I'm talking about Bitcoin, Litecoin, and making, quote, money that way. So I think the issue is they need to see that is suspect to Venezuela can shut the electricity off. Well, then they can't mine jack. Then that Bitcoin is worthless. The same in Puerto Rico. And that's where actually having physical specie. But these people don't have experience with physical specie.
Right. You're talking about cash or bullion itself.
Cash or bullion itself. I mean, that's where you would easily 40, 50 years ago, we had a crisis You saw the pictures in 1979, people lined up in front of coin stores.
Sure.
When they saw inflation. They absolutely knew that the dollar they had was going to be worth less unless they converted that dollar into gold or silver specie.
Mm-hmm.
And today, because the cryptocurrencies go up, people viewing them as the inflation hedge, they have to crash or be hacked, or in some way people need to realize that they're not as on solid ground as they say they are, because they rely on too many inputs. They rely on electricity, access to the internet, access to the satellite, whatever it is. It's not the same as having the coin in your hand.
Yeah.
They say, well, I control the keys. Yeah, but you don't have your Bitcoin in your hand. You have to access it.
It's synonymous to positioning and investing. You don't go all in on one thing. You don't go all in on one digital thing and just assume that the infrastructure will always work exactly like it's working at the moment. You have to kind of use a combination of various things, the things that have worked for hundreds, thousands of years, and then other things perhaps that are new and are, have great technology to them, perhaps.
All right. Well, Louis, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Well, I just want to thank you both for an interesting discussion. It's always good to hear smart people talk about the precious metals. If you visit smallgold.com, one of the things about the website is I always put up charts, and I like to make a lot of charts. If you like charts, you can see them better on the website than you can when you watch the YouTube videos, although you get commentary there. So please check out the Small Gold website, the YouTube channel. I'm on Twitter, Gab, Steemit, pretty much all Facebook. So thank you very much for having me on.
All right. Thank you so much.